Roll the dice if you dare. These unpopular penny stocks to buy have little media buzz, but could deliver big time. Galliano Gold. Galliano Gold could be an intriguing inflation hedge. Ring Energy. Ring Energy may see a recovery run later this year. Velo 3D. Velo 3D is highly speculative, but the industry is enticing. Let's dive in. Here are the three unpopular penny stocks that could prove naysayers wrong. Welcome to Timely Investment Research. Here's the ugly truth about unpopular penny stocks to buy. Statistically, they're more than likely to prove naysayers right. Yes, I know, I'm contradicting the title of my own narrative. I get it. But there's one thing that you need to get before you start perusing this space. It's an extremely speculative sector. Popular or not, penny stocks tend to destroy value on average rather than create it. If that wasn't the case, they'd at least be respectable small capitalization plays. Still, I also understand the allure behind this market segment. Basically, you likely won't get rich betting on dividend-paying blue-chip securities. If you want upside, especially dramatic upside, you gotta go against the crowd. On that note, here are unpopular penny stocks to buy. Number 1. Galliano Gold. Based in Vancouver, British Columbia, Canada, Galliano Gold is a precious metals exploration firm. Per its website, the company commands a 45% interest in what it terms a quality asset. This consists of a large deposit of a 4.6 million ounce mineral resource and a 2.1 million ounce mineral reserve. Fundamentally, Galliano could be intriguing because of the sticky inflation. Basically, the underlying asset represents a universal hedge against rising prices. Even better, the mining firm enjoys support from the analyst community, who project 2024 revenue to land $323.37 million on average. Further, the most optimistic target calls for sales of $367.62 million. Looking out to 2025, the top line on average may reach $512.1 million. If so, that would represent a massive 58.4% leap from 2024's projected sales. As well, the market seems to respond nicely to Galliano Gold stock, which has gained over 21% since the start of the year. Overall, experts rate shares a consensus moderate buy with a $1.59 price target, implying 42% growth potential. Even though it doesn't generate much news, it's one of the unpopular penny stocks to buy. Number 2. Ring Energy. Based in Midland, Texas, Ring Energy bills itself as a growth-oriented independent oil and natural gas company. Per its website, Ring focuses on the acquisition, exploration, and development of high-quality, oil and liquids-rich assets in the Permian Basin. However, it doesn't seem to resonate with the market. Since the start of the year, Ring Energy slipped more than 3%. What's worse, in the past 52 weeks, Ring shares incurred a drop of almost 36%. Over the past 5 years, they plunged over 76%. Still, analysts believe in the company. On Thursday, management will likely release its fourth quarter earnings report. Based on expert assessment, the company could print revenue of $358.17 million, up 3% from the prior year. Further out to the end of 2024, that's when a recovery could materialize. Sales may land at over $377 million, representing a 5.3% increase over 2023's projected results. Also, the high side estimate for 2024 clocks in at $405 million. Lastly, the Street's experts peg shares as a consensus moderate buy with a $3 price target. If Ring Energy gets there, that would be a 114% move higher. Therefore, it may be one of the unpopular penny stocks to buy. Number 3. Velo 3D, easily one of the least liked enterprises, Velo 3D is in all kinds of trouble. Since the beginning of the year, Velo 3D stock lost more than 32% of equity value. In the past 52 weeks, it's down just over 92%. I suppose you could make the argument that in the past month, Velo 3D gained more than 9%. Therefore, sentiment may have stabilized. Still, it's a risky wager to take. Further, Velo 3D suffers questions about its business. As an additive manufacturing specialist, the company aligns with a burgeoning industry. Per Grand View Research, the space generated a valuation of $20.37 billion last year. Going out to 2030, the sector could expand at a compound annual growth rate of 23.3%. At that time, the industry may be worth $88.28 billion. However, it's also true that additive manufacturing companies have suffered severe setbacks, so caution is necessary. That said, analysts expect 2024 sales to reach $121.29 million, which is a noticeable improvement. Finally, Lake Street's Jacob Stephen is the long expert covering Velo 3D in the past 3 months. The analyst rates shares a buy with a $2 price target, implying almost 700% upside potential. Thus, Velo 3D may be one of the unpopular penny stocks to buy. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.